Good morning, everybody. Hope everybody's doing well. We'll give everybody a couple minutes to file in. Good morning. Good morning. Good morning. Good morning, Motive. Good morning, bro. Morning. Happy New Year. Yep, absolutely. Hope everybody had a good Christmas. All right. Good morning. The Hammer. The Hammer 2030. All right. Good morning. Good morning. All right. Let's go ahead and get started. This is Michael coming to you from Game Edge on Friday, December 26th. Hope everybody had a great Christmas. As always, here at Game Edge, we'll start with our three pillars: sentiment, structure, and trend. And then we'll look at some individual equities at the end. If anybody wants to go over any of those, you can post those in the chat. All right, let's go ahead and start with our market trend model. Obviously, we had a 1 p.m. closing on Christmas Eve. So we just have the market trend model ending at 1 p.m. Significantly bullish to the upside. So quick orientation is market trend models based on the tick index. Again, the bolded white line is your intraday instantaneous cumulative CT or cumulative tick. Again, that's if you're 0DT trader, that's what you want to be watching. And if you're from lower left to upper right, above all the shorter term moving averages, then obviously more stocks are being bought than sold, and you want to be on that side of the overall market. Quick look up here into the breadth frame, new highs versus new lows. Obviously, new highs continue to outpace new lows. And then we saw a significant move to the upside in the filtered cumulative tick, actually. So it's indicating institutions are putting capital to work and are buying more stocks than selling. So again, bullish overall look. Our colored ribbon is our longer look back period. This is how we position money for longer term. And this is our gate or trigger for our mechanical portfolios. Mechanical portfolios were turned on when we cross back above the red. And then as long as we stay above the red with a positive, obviously, slope, then we'll continue to enter our mechanical portfolios, which are our P-Trans to PX, as well as our wheel strategy portfolios. All right, let's move on to the market trend model for the trading view. Again, we released this basically 2 weeks ago now. Excellent feedback from all of our members. Again, this is just showing that significant buying through the whole session on Christmas Eve on the 24th, and then we ended at 1 o'clock. But again, just significant buying and moving to the upside. So you want to be on that side of the market when this is indicated that more stocks are being bought than sold. All right, moving on to the SPX options complex. Again, largest, most notional value that we look at. A new feature that we've added to our web app is color coding and a scale of which expiries are the highest weighted or have the most OI. So again, that makes it easy to click on those. So for the SPXA, we've clicked on these 4 or 5 that are the highest weighted with the expiry. So that includes 73% of the total OI. So again, showing call dominated above and below spot price. We notice transition here. Again, staying above 68.65 will be in a more favorable bullish in structure and environment. And then below 68.785 would be a little bit more bearish. But you'll note, obviously, large in the money calls strikes below us. Again, those will continue to be supportive on any pullback or any move down until we see that change. And then obviously 7,000 to the upside, 69.50, the first hurdle there, and then 7,000 to the upside. You see that significant out of the money call speculation, and actually 70.50 to the upside also has call speculation starting to creep in. So call dominated should be supportive on any pullback. And then we have speculation to the upside for institutions via these expiries that are coming up. All right, SPXP, again, we've done the same thing. We've turned on 83% of the total OI via these highlighted tiles. So this quartile scale tells you that this colored purple is the top 25%. So you can easily look at those, or you can click all of them on. But obviously, we want the highest weighted OI to get an overall picture of what is occurring within the structure now, as well as projected to occur on out towards these expiries. So call dominated above and below spot price. You see transition here is fairly wide at 68.50. And then 69.15 to the top side there. And then we have speculation obviously up towards 69.50. And you see the overall structure there above us. It could be a little bit difficult to move above 69.50 today, depending what the intraday call versus put speculation looks like. But we do have obviously green net delta all the way to the upside, except for that 7,000 strike there. So speculators are looking for price appreciation and higher prices to the upside. All right, let's move on to the SPXP GEX ratio. Only cautionary symbol or sign for me today is the SPXP was rising in price, but our GEX ratio actually had a negative slope. So this is indicating some out of the money call speculation could be dropping or monetizing. And as long as this slope stays above, the red dotted line stays above 1, call speculators are in control. This ratio gives you short dated call gamma versus short dated put gamma. So we had that time component, which is gamma to it. And again, as I said, as long as it's above 1, the bulls are in control and speculation to the upside is alive and well. But this is the only cautionary symbol for me. Again, it's not saying we're going to have a significant pullback or sell off in the overall market. It's just telling me that the out of the money speculation may be starting to get a little bit tired. You'd want to see this GEX ratio. If SPX continues to the upside, you want to see this GEX ratio in confluence and moving to the upside, also indicating significant out of the money call speculation. So we'll watch this to see if SPXP starts to consolidate, and we see the GEX ratio start to pull back a little bit, or do we see the SPXP pull back and the GEX ratio drops, or the SPXP moves to the upside and the GEX ratio continues to drop? Obviously, that'd be a negative divergence within the overall structure, and we'd be a little bit more cautionary for a large move to the upside. All right, let's move on to our delta balance chart. As always, all of our charts here at Game Edge are interactive, so you can scroll over them and zoom in if you wish. So we separate the two structures from above and below spot price. We call the green dotted line the right-hand plane. That's above spot price. That's all the speculation. That would be your out-of-the-money calls as well as your in-the-money puts. The red dotted line is your left-hand plane. That's below the current closing spot price. So again, those are in-the-money calls below you, as well as out-of-the-money put speculation to the downside. And the aggregate, the blue dotted line, is your delta balance. Obviously, you want to see the delta balance staying at 1. That's indicating bulls and speculators are in control. You want to see both the planes above 0, as well as the delta balance indicating bulls and call speculators are in control. And then the projection on out in time with further expiries, obviously you want to see that stay above 0 if you're a bull, as well as the railed delta balance at 1. So you'll see the left-hand plane, we actually see it rising. So that's out of the money puts most likely closing, and in the money calls becoming more and more supportive on any pullback. We do see a slight drop in the out of the money call speculation in the right hand plane. So it's what I talked about in the delta or the GEX ratio, as well as we're seeing it in the delta balance on out in time. And you'll notice that you're seeing a slight negative slope in the right hand plane also. So again, even though we have significant out of the money speculation to the upside and further out expiries, it may be tailing off just a little bit. So upside appreciation may be a little bit more difficult as we move out through today and into expiries into today is Friday into the next week. But again, bulls in full control. So we anticipate pullbacks to be supportive. Buy the dips, sell the rips. We'll continue that regime for market makers and dealers because the structure we have also. All right, moving on the SPXP net stack command, high sensitivity levels for today. I've already called out 69.50 to the upside. Those out of the money calls there, in the money calls below us will be supportive. You see the left-hand plane integral compared to the right-hand plane much larger, which is what I talked about on that delta balance. Calls in the money calls below us will continue to be supportive on any pullback. Net charm 69.10 to the downside. Again, those out of the money puts, as long as we're above that level, will continue to decay, and those will be supportive. You notice the left-hand plane integral larger than the right-hand plane, so again, supportive on any pullback. And then out of the money calls above us, again, those will be that headwind that in the money, intraday out of the money call speculators versus put speculators will have to overcome. So again, 69.50 right-hand plane strike, pretty well entrenched so far today. So we'll see if we can get above that. Gamma, again, same levels there. And then net Vanna 69.10, obviously larger to the downside. So if we did get below 69.10 and we saw out of the money put speculation, Vanna could kick in and drive us to the downside. Same thing with the upside, 69.50. That's where your tailwind is going to be if you get above 69.50 and see volatility continue to drop. Obviously, it's already pretty much dropped significantly down toward that 13 level. So anyway, that's the net stack command for today. All right, moving on the SPXP 0 DTE, call dominated as you would anticipate. We already went through those 3 or 4 tools that would tell you that. And then you get to the web app and you can look at the structure. Obviously, I have the 26 turned on here today because it's 0 DTE. You'll notice the DEX and GEX transition here. DEX transition is actually larger than the GEX transition today. GEX is this gray bar here at 40.45. You also know PGEX, again, is at 40. And then, or sorry, PGEX is at 50 and GEX is at 40. So again, to the downside, if we're between 69.20 and 69.45, we'd anticipate some choppy price action. And then you have the overriding drunken sailor range. Again, this is low OI exposure between then 69.50 and 69.10. We'd even give an overall structural pullback down towards 6,900. As you see, the expected move today is very low at 0.4, 28 points. Obviously, that's the straddle for today. So low volatility. We do not anticipate a significant move in price back and forth. Could be just trapped between these drunken sailor ranges as well as the transitions. But if we do get above 69.50, then we have an opportunity to appreciate to the upside. We'd be looking for that quarter level at 69.75. That would be COTMC, where that's a proprietary gamma edge level where out of the money calls go in the money. And historically, that's where we see some monetization. But we would have to see our vol M command indicating significant out of the money call speculation to the upside, large volume transacting, which we may not see today. Post Christmas, post holiday, we may actually have lower volume and lower OI heading into today. So we'll continue to watch this throughout the day. But again, 69.40 to 50 would be that area we'd be watching to get above. And if we do, we'd be looking for 69.75. Below that, we're not really bearish, but saying that we could have a pullback down towards 69.10, 69.20, or even 6,900, depending on what speculators are looking to do. So with that, I'll leave you. We'll head into the trading view chart. I've already outlined the transition areas for today. The 0 DT transition is outlined via the manual drawing, and then the full expiry script is on there. These are in our Discord for our members, 0 DT, as well as full expiry scripts to overlay on a trading view chart, as well as our new market trend model for trading view. So you can come join and grab that code. Again, we've already been reacting at 35. I'd give it all the way up to 40. That would be my kind of my wet sponge area to the upside that I'd be looking for stalling or possible rejection area to the upside, and then a pullback down in towards 69.20. If we get a 40, then we'd have to push through 42.50 and 45 up towards 50, and then I would be looking for stalling or rejection into that 50 level if we don't see out of the money speculation from market participants for today. So, all right, with that, come join us at GammaEdge.us newsletter. Put in your email. You'll be delivered the Beyond the Bell newsletter this weekend. Again, it goes over our thesis, our tools, and how we navigate the SPX option structure. Also, check out our free courses, GammaEdge Fast Pass. That's our flagship options course. Get you up to speed very quickly with how we navigate the SPX option structure with our tools and methodology. And then, as always, you can come join us. Click on the pricing tab in the Discord. So let's go ahead and look at some individual equities. I see a few posted already, so we'll go ahead and check those out. Oops, sorry about that. I punched in GR. So looking at, you want to look at SLV. Okay. So looking at SLV, does GEX Racer or DBS suggest we are getting an exhaustion level? Let me pull that. Chuck, do you have those charts up? Let me run those real quick. And then I'll pull them over. So while those are running, I'll go ahead and jump on to the individual equities, and we'll come back to that, Chuck. Let's see. Amazon for next week. Let's check Amazon. Oops, sorry about that. So what we'll do is we'll pull this up. Obviously, I'm already on 0 DTE, but we'll go for Amazon. We'll go for next week. Here, let's do what I do. So we turn all these on, select all, and this will tell us the highest expiries. So we'll look at those. You put them in chart 1. Okay, I'll pull them out. So again, this is to let you know that the top 25% of OI into next week is 116. Obviously, that was the monthly. And the next expiry for Amazon be 1.2, so not a significant amount of OI. And then 1.9 is even less. So we'll go to 1.2 for the next expiry here. There we go. So 1.2 into next week. Call dominated above and below spot price. So mechanically, this is how we go. We would look at the transition area, which is 225 to 227.50, and spot price is above that, so it should be supportive. Call dominated, speculation to the upside. We see PGEX at 235. That'd be that highest sensitivity point. I'd be looking for some stalling or rejection into that overhead area. If you do get above 235, capture all that positive delta. I'd be looking for COTMC at 240. Any pullback should be supportive on Amazon. Looks good into next week. All right, let's look at NVIDIA. And then we'll head to your SLV charts. So let's go to next week for NVIDIA. 1.2, call dominated above and below spot price. 192.50 to the upside. Looks like that area to get above and take. Let's look at the next expiry after that. 190. So the structure actually drops on NVIDIA. Even though we have significant out of the money speculation, you'd like to see that PX move up towards 200 for NVIDIA. And there it does. Towards the monthly, we actually move it up to 200. You see significant OI into the monthly. So speculation to the upside looks good on NVIDIA. Okay. All right, let's go over to SLV. Let me pull this up for you. So first we'll look at the GEX ratio. So the key thing for GEX ratio here is you're above the 1 level. SLV is pretty much riding that 3 to 5 level. So again, this is indicating bulls are in full control of SLV. Spot price looks like it did try to consolidate, but you have a full positive slope in SLV. So again, indicating speculation to the upside on a short dated call versus put gamma is alive and well and moving significantly to the upside. So then we'll look to the delta balance. You do see the right-hand plane just traveling along 0. So you'd like to see that move to the upside. But the left-hand plane and delta balance are pegged at 1. So again, supportive on any pullback. But I would like to see this right-hand plane get a little bit positive slope. Again, it's right at 0, but I'd like to see that at least a little bit of positive slope to the upside, indicating out of the money speculation. So let's go look at the web app. So web app, let's look at SLV for next week. So the 29th, call dominated. So PGEX is at 68. And let's look at 1231. So 68. So you're right at that PGEX level. Now structure does advance into next week. So let's pick a couple of these into next week. So you're looking at 70 to the upside. Looks pretty good speculation wise, call dominated. But you see all of this delta and charm below you is supportive. But you see the charm above. We do have out of the money speculation up towards 70, but it's not significant. And that's what that delta balance chart is showing you. So my advice would be supportive on pullback, move to the upside. 70 would probably be that area that I'd be targeting to the upside. And then above that, you're not really seeing anything, obviously. And the OI drops, obviously, into next week pretty significantly. So that would be where I'd be looking on SLV. Hopefully that helps. Oops. Sorry about that. AMD. Yep, absolutely. I mean, SLV has had a significant move, so I would not be surprised if we see some consolidation on SLV. So AMD all expiries turned on, call dominated, 220 to the upside, looks good. Let's go into next week. 1, 2, let's turn on. So next Friday's expiry on AMD, structure shifts significantly to the upside to 235. So out of the money speculation looks good. Up towards 235. Let's look at 1.9. So you see 1.9, the OI actually drops fairly significantly. And if you look at our open interest scale, it's actually in the bottom 25%. So I'd be looking at 1.2 for the most part. And then 116 is another expiry that looks good. So call dominated, 240 to the upside actually. So the structure continues to advance for AMD. Let's pick 1.2, 1.9, and 116. Sorry about that. So call dominated, 240 to the upside, 230 here. That flips a little bit, obviously. So 230 to the upside looks good for AMD for speculation. And then obviously significant in the money calls below you should be supportive. So AMD 230 to the upside looks like a good sensitivity speculation area. Obviously you need to get over 220, but 230 to the upside looks good. So All right. Yep, absolutely. All right. Thanks everybody for joining us. Hope everybody has a great day. Manage risk as always, like we talked about already. Upside 240, 240, 250, and 245 would be where I'd be watching for the upside. We're already seeing some stalling here into this overhead area at 235. So again, upside appreciation may be a little bit difficult today, depending on what the intraday call versus put speculation looks like. So thanks everybody. Make it a great day.